Hello and welcome. My tax accountant has put together this discussion to help you navigate one of the most important bits of paperwork you might ever have to deal with, the UK's inheritance tax forms. Because when it comes to your legacy, it can all boil down to just one number.
And that number is 40%. Just think about that. Everything you've worked so hard for, your home, your savings, maybe a business you built from the ground up, now imagine 40% of its value over a certain limit potentially going straight to HMRC. That's the standard rate for inheritance tax. And that's exactly why understanding what to do next is so important.
It's the big question, isn't it? Getting this right is about so much more than just money. It's about saving your loved ones from a world of stress, confusion, and heartache at a time that's already incredibly difficult. But here's the good news. There is a clear roadmap. You just need to know which path to take. Okay, let's dive right in. So, here's what we're going to cover. We'll start with the absolute basics. Then we'll look at the two main routes you can go down, one for simple estates, one for more complex ones. After that, we'll get into the really powerful stuff, the tax reliefs that can save you a fortune. And finally, we'll see how an expert can guide you through the whole thing. Right, first things first, before we get into any specific forms, let's just get our bearings. Understand what this inheritance tax maze is all about and why these forms are so critical to navigating it successfully. So here's the deal in a nutshell. Every person in the UK gets a tax-free allowance of £325,000. It's called the nil rate band. It's only the part of the estate's value that's above this number that gets hit with that 40% tax. The forms we're talking about today, they're your official line of communication with HMRC to declare what's in the estate and figure out if any tax is actually owed. Okay, let's talk about our first path, which thankfully is the route that most estates in the UK get to take. This is for what HMRC calls accepted estates, which is just a fancy way of saying the estate is pretty straightforward and no tax is expected to be due. I want you to picture a fork in the road right at the very beginning of this journey. Which path you take depends entirely on how much the estate is worth and how complicated it is. Path 1 is the simple route, using Form IHT 205. Path 2 is for the bigger, more complex estates, and that requires the much more detailed Form IHT 400. Let's stick with Path 1 for now. So, with Form IHT 205, you're basically just giving HMRC a summary to prove that, yep, no tax is due here. It's a confirmation slip, really. Take Marjorie, for example. She's a retired teacher whose estate is worth £280,000. That's well under the $325,000 threshold. So her daughter, who is handling things, would just use Form IHT 205 to report it. It's a relatively quick and painless process for simple situations. Okay, and here's a fantastic little pro tip for you. The rules actually changed recently to make things even easier. If the person passed away after January 1st, 2022, there's a good chance you might not even need Form IHT 205 at all. The necessary details are often just included in the main probate application now. It's a brilliant simplification, but please always double-check using the tool on the gov.uk website just to be sure. All right, so what happens when an estate isn't so simple? What if it's worth more than the tax-free limit, or it includes things like a business or property abroad? Well, that brings us squarely onto Path 2 and the much more detailed Form IHT 400. Yep, this is the heavy hitter. Form IHT 400 isn't just a summary, it's a full deep dive inheritance tax account. You're going to need this when the estate's value is over that £325,000 threshold or if it has any of those complex bits. Let's think about Idris, a business owner. His estate is worth $1.8 million, so it's way over the limit. And it's made up of his home, some investments, and his company. His family has to use Form IHT 400 to give HMRC a complete financial picture so the tax can be calculated correctly. Now, IHT 400 isn't a solo act. Think of it as the main report, and it comes with a whole team of supporting documents, or schedules. Each one has a specific job. For example, IHT 402 is how you claim a spouse's unused tax-free allowance. IHT 413 is for claiming relief on business assets, and IHT 435 is for claiming an extra allowance on the family home. These aren't just more forms to fill out. These are the actual tools you use to claim some incredibly valuable tax breaks.
And that brings us to what is, for me, the most exciting part of this whole thing. This is where we talk about how you can legally and strategically slash that potential tax bill. This is where smart planning goes from being a good idea to being absolutely essential for protecting your legacy.
For anyone who owns a business, this is a total game changer.
It's called business relief, and it can literally wipe the entire value of your business out of the inheritance tax calculation. Now, there are a couple of key rules. It has to be a trading business, so not a company that just holds investments. And you need to have owned it for at least 2 years.
Just look at the impact this can have. Let's take Ravi, who owns a restaurant worth £600,000. Because it's a trading business, it qualifies for 100% relief. That means the entire £600,000 is passed on completely tax-free. Without this relief, the tax bill on his business alone would have been a staggering £240,000. That's £250,000 that stays with his family, not with the taxman. Incredible.
Okay, let's talk about another magic number. This is an extra tax-free allowance that a lot of homeowners can get their hands on. It's called the Residence Mill Rate Band, or RNRB for short. And for this tax year, it's worth an extra £175,000 per person. This relief was specifically created to help people pass on their family home. So you get your standard £325,000 allowance, plus this extra $175,000 on top. Better yet, you can transfer it between spouses. So a couple could shield up to £350,000 of their home's value just with this relief. But, and this is a big but, there's one crucial condition. The home must be left to direct descendants. We're talking children or grandchildren. If you leave it to a nephew, niece, or a close friend, you lose the relief completely. It's a really common and costly mistake.
So you see the paths, you see the forms, you see the powerful reliefs, but trying to piece all that together correctly, especially when you're grieving, can be overwhelming. And this is where having an expert guide in your corner doesn't just help, it changes everything. They can turn what feels like a confusing maze into a clear, simple journey.
Honestly, a comment like this says it all, doesn't it? It shows the real difference between someone who just crunches numbers and someone who offers genuine support. This was the experience of the Patel family, and their story is the perfect real-world example of how that expertise leads to incredible results. Let's walk through what happened.
So the Patel family was dealing with a £2.4 million estate. It was complex, a business, a large family home, and they were looking at a really daunting tax bill. So here's what the team at My Tax Accountant did. First, they did a full assessment and immediately spotted that Mr. Patel's late wife's unused tax allowances could be brought over. That single move instantly doubled their tax-free threshold to a cool £1 million. Then, they meticulously went through and claimed every single relief they were entitled to, securing 100% business relief and the full residence nil rate band. They took it step by step and completely transformed the outcome for the family.
Just look at these numbers. By using Form IHT 413 for business relief, they saved the family £360,000 in tax. Boom, just like that. By using Forms IHT 402 and IHT 435 for the spousal and property allowances, they shielded a full £1 million of the estate from tax. The grand total in tax saved was over £400,000. It just goes to show, getting professional advice isn't a cost, it's an investment in protecting your family's future.
So, if you're facing an inheritance tax situation, or even if you're just planning for the future, please don't try to go it alone. My Tax Accountant offers a free initial consultation to help you figure out the best way forward. You can reach them directly on WhatsApp or give them a call on 07854-255-375. Or you can send an email to info@mytaxaccountant.co.uk.
And hey, if you found this guide helpful, make sure you subscribe to the My Tax Accountant YouTube channel for more clear, simple tax advice just like this.
We'll leave you with that final thought. You've seen the roadmap, but the most important thing is taking that first step. Whether that's getting your paperwork in order, reviewing your will, or making that call for expert advice, the single most powerful step is the one you take today. Thanks so much for watching.